I'm Jim Sinegal. Welcome to the Fragasso video blog. Artificial intelligence is a topic that's becoming more and more prevalent in our conversations with clients. Today, I'd like to address three of the common questions we've been getting about AI.
Exploring the impact of artificial intelligence on investment portfolios. What is the economic impact of AI investments?
Very simply, artificial intelligence refers to software that allows computers to perform complex tasks that were previously achievable only by humans. We think that just as the internet enabled enormous boosts in productivity over the last 3 decades, artificial intelligence is likely to do even more over the next 10 years. We've already seen AI advance rapidly from performing relatively simple tasks like bank fraud detection or movie recommendations to more complex functions like customer service and medical diagnostics, and also to creative tasks like photo editing and content creation. On the negative side, technological advancements are always a double-edged sword. As computers become more efficient and more capable, some jobs and some companies are going to become obsolete. So we have to consider not only what companies are going to benefit from AI, but also what companies might share the fate of companies like Kodak, Blockbuster, or the Yellow Pages that were made obsolete or even extinct by advances in technology.
Do I have exposure to AI stocks in my portfolio?
We actually believe that most adequately diversified investors already have plenty of exposure to AI stocks in their portfolios. In fact, many commentators have expressed concern that the market indexes are becoming too concentrated in technology. Tech, media, and telecom stocks now make up more than 40% of the S&P 500, and just 6 companies now make up almost a third of the index. More relevant to this conversation, this handful of companies contains the major owners and producers of AI technology. For example, NVIDIA's GPU chips are the industry standard for processing. Amazon, Alphabet, and Microsoft run virtually all of the hyperscale cloud infrastructure where most of that processing takes place. Meta and Apple have also heavily invested in AI capabilities, including things like personal assistants. These companies are now worth trillions of dollars, and they're using that financial strength to stockpile hardware, as well as paying up to get the best engineering talent. It's incredibly hard for smaller companies to compete, and for that reason, the biggest tech companies have at least temporarily cornered the market for AI hardware and software. If you own any of these companies, you have a lot of exposure to AI.
What are some of the risks associated with artificial intelligence?
One of our most important principles at Fragasso is that portfolio management should focus on risk before return. And the market's increasing concentration in AI stocks is certainly a risk to be aware of. Technological advancements in general are difficult to maintain. Just a few examples of this. If you remember the 1990s, companies like Lycos, Excite, AltaVista, and Yahoo were market leaders in search before Google finally came along and developed a better algorithm. On the hardware front, computer manufacturers like Compaq and Dell are no longer household names. Apple actually might have gone out of business if it weren't for the iPod. So we can easily imagine a world in which this eventually happens to today's leaders. The founder of NVIDIA, for example, worked for other semiconductor companies before leaving to start his own firm. It's almost certain there are entrepreneurs at all of the big tech companies who would like to eventually do the same. There's also an economic risk within the long-term growth story. The race to build AI capacity is somewhat reminiscent of the boom in fiber optic spending in the early days of the internet. The biggest tech companies are all spending tens of billions on chips right now, but it's not clear that all of these companies actually need to have the same AI capabilities. If there's any sort of slowdown, one company takes the lead over the others, at least some of these stocks will prove to be extremely overvalued. For more on the topic of artificial intelligence, please read my full blog, and of course, we're always happy to discuss individual circumstances in more detail. Thank you for tuning in to this episode of the Fragasso video blog.